Yeah, it's a very interesting question. At some point, of course, when everybody is thinking one way, then it makes a country and a country's market very vulnerable. And the shift in general thinking about India in the past 15 months is pretty big. And so it does concern me a little, but it would be something I think would be more worthy of focusing on after we see what detail is announced in the budget. If the budget is disappointing, some of these what I'd call Johnny-come-latelys of sort of lazy optimists will quickly disappear. You know, I have to be diplomatic, I suppose, but I'll take some risk. You know, the IMF forecast changes are neither here nor there, in my opinion. The IMF has no particular success as a cyclical forecaster. The forecasts are usually not as good as the revisions they make about what growth was a couple of years after that year has finished. And in particular, for them to be making these downward changes at a time when oil prices have fallen so much strikes me as pretty strange. In the days where I was managing a lot of economics researchers and doing a lot of it myself, lower oil prices would have been a definite reason to increase a forward-looking GDP forecast. So I think the IMF's probably got that wrong, in my opinion. And I continue to think, particularly speaking just after the latest Chinese GDP numbers, the Chinese economy is adjusting better than many people think, and its growth is increasingly being driven by its own consumer and its own tertiary sector. So I think there's more positive things going on in the world than the tone of that IMF forecast revision suggest.